We kick off with financial markets having responded well to the European Central Bank's unequivocal statement that it would do whatever it takes to ensure that the euro survives. We look at the implications of the global economic and financial context for South African investors with Tony Bell. He's a portfolio manager at Vunani Fund Managers. Welcome, Tony. Good to have you here from Cape Town.
Thank you.
It's a tricky global situation and three major blocks doing various things and not necessarily moving in the right direction: the US, Europe and China. If you can give us your thoughts on that.
Sure. What we look at when we look at the three major blocks is to understand what the key drivers are. And I think what we've tried to do with all our investor communication is separate the two issues: what's happening with central banks, what's happening with the real economy. There's quite a lot of noise around both, so we try and extract the key elements and keep it simple. Central banks in Europe are essentially in a fight to keep the banking system liquid. There's been a lot of deposit flight from peripheral Eurozone through to Germany. Investors are obviously concerned that should the Eurozone break up and should currencies devalue, they would lose a large proportion of their savings. I think that's Mr. Draghi's main short-term headache. Banks probably need to be recapitalized given that deposit flight, and we've already seen that process start to take place with the Bundesbank and the ECB lending money back to the central banks of Spain and Italy in order to recapitalize their banks. So I think it's very important for investors to understand that the real action behind the ECB is to keep the financial system in the Eurozone afloat, very much as Bernanke did post the Lehman's crash. The transmission mechanism of that through into the real economy is a lot more muted. And that's where the second part of the understanding comes in. The real economy in Europe is in trouble. We've seen Spain head into quite a deep recession. Italy is in recession. Greece is in a very deep recession. And Germany is probably heading in that direction, if not already. And that's really where the politicians need to start addressing some of the key issues, because those are beyond the prevail of the ECB.
Yes.
Yeah, Tony, just on that, you've pointed out that the European banks haven't been recapitalized. I mean, is that not the first step for this interlink between the real economy and the financial economy? And we know the problems in the banks in Europe and the problems with sovereign debt.
Yeah.
And because the banks hold the sovereign debt, they're almost connected at the waist to these problems.
Yeah.
Isn't it necessary to recap the banks first and allow them as the engines of an economy to get the credit out to those businesses that could use the credit, that are making the real wheels of the economy tick?
It would be nice if the jigsaw puzzle was so simple. Step number one, ECB provided LTRO, long-term refinance operation, really to backstop the banks. Banks are in a very precarious position. They do still have quite a lot of loans on their books that haven't been written off. If you look, for example, at the mortgage foreclosure rate in the States, the write-offs are about 14% of debt outstanding. In Spain, that's as little as 2%. So as we see it, yes, the banks do need to recapitalize, but we're not yet sure that that will logically lead to further credit extension to promote growth. We think the politicians have got to move very, very markedly away from where they are in terms of their policy thinking. Austerity doesn't really solve very much. You're seeing it in Spain and Portugal at the moment. More austerity means primarily more job losses in the public sector because of the overbearing dependence on socialism policy or socialistic policies down south. Lower employment leads to lower taxes, and it in fact exacerbates the debt problem. So I think Mr. Draghi has taken a very bold step, a very necessary step. There are very many different views on the position, but I think if he hadn't backstopped the financial system to the extent that he's indicated, the other issues would be that much more difficult to resolve.
Tony, so he might have been rescued from this precipice, from the disaster, with his indication that he'll do whatever it takes, but it doesn't mean that we are necessarily moving into a better growth phase. So the outlook for the world economy presumably remains of dull and precarious growth.
That would be our assessment. We see Europe as having a very tough 2013. We think that the common sort of hope that China will stimulate its way back into a consumption-based economy consumption-based recovery is a little overplayed. We think China will, to a large extent, focus its spending on developing the western part of the country, which still lacks infrastructure, as opposed to the eastern seaboard, which is very well developed. Chinese consumers are generally well off on the eastern seaboard. The average per capita income has risen from the late 90s of around $850 to around $10,000 per person. So they've benefited from the number of years of economic expansion. And we see the process in China as being more a continuation of urbanization, which is probably about 40% of the way to target, as opposed to changing China into an American-type consumer nation. America's going to have to do some hard soul searching. We've got the hype around the presidential election, but we've got the so-called fiscal cliff looming. And I think whilst the signs are encouraging, and Dr. Bernanke is doing quite a lot to support the real economy, through the lower interest rate policy, the recovery is going to grind.
Okay, so Tony, just going back, taking a step back to China, because its fortunes are very much interconnected with resource-rich countries like not only South Africa, but the rest of the continent. Where does it leave your thesis leave the expectations for Chinese economic growth going forward? And where does it leave the super cycle, what they called the super cycle 5 years ago in resources? Where does it leave the fortunes of South Africa?
Of course. I think, like with all these debates, one has to dig a little bit more into the detail. The focus at the moment is clearly on the declining iron ore price. We see that as a short-term aberration. China will still need quite a lot of steel. It has massive infrastructural projects it can still embark on, and it has the means to do so. So selectively in the energy field, in the iron ore field, for example, I've often come on the show and spoken about Exoro that's been quite bumpy lately, in some of the rare earth minerals and the mineral sands commodities like zircon and rutile and titanium, where you do have a pressing demand because of the need to continuously industrialize and urbanize, coupled with the recovery in the States, copper, iron ore will still find long-term support.
Tony, if we look at how that translates through to your stock selections,
yes.
You seem to have your preferred stocks included there. You've got BHP Billiton,
correct.
So you have some confidence in aspects of the commodity super cycle and value opportunity there, African rainbow minerals, but yes. You're not liking platinum.
No, I think the platinum industry has a number of headwinds still to deal with. We attended a management lunch 2 days ago with the management in Billiton. And I think that the Chamber of Mines in South Africa, as well as Billiton's management, conveyed a bit of an impression of concern around the way in which the labour negotiations had gone, and just the scene that it sets for future labour negotiations in South Africa. And they point out to us that capital is very fluid. Different ore bodies exist around the world in areas like iron ore and coal, which can be exploited. And I think from a policy perspective, the challenge for the South African government is to create an environment that is conducive to investment, not hostile to investment. As far as the platinums themselves are concerned, the real issue is partly the labour, but partly the state of oversupply. Even if you were to take out significant production from Lonmin and Impala, the current level of production would still be roughly 20% in excess of what the world currently needs. Yes. And that would put further downward pressure on the prices.
So Tony, I mean, just a twofold question. First of all, with the labour situation, you know, this situation had been around where there's this lack of, I understand this lack of collective bargaining at group level in the platinum industry for a long time. Right. And it only reared its head when this young upstart union, AMCU, came and started trying to recruit members aggressively.
Yes.
So why, you know, we always talk about these things in hindsight. You know, why wasn't this collective bargaining issue raised by the management teams at these platinum companies before? Why do you think it's only it's been dormant for so long, and now it seems to be the root cause. And the second half of my question...
You've only got a minute for this, so you can keep it simple.
Is do you hold a platinum ETF if you're bullish on that platinum price?
I'd rather hold the platinum ETF, but as a plug for your magazine, I think the answer is well covered in your own editorial. It all has to do with the legislative changes and close-out arrangements where employers and unions were able to close out other unions from the negotiating process. And so AMCU had a very tough task in recruiting members from NIMSA, and the business of recruitment got very ugly.